We pray for better days.
What's up guys, welcome back. Today I'm going to teach you one of the very fundamental building blocks of being able to analyze charts, and those are support and resistance. So this is the very fundamental basics of conducting something called technical analysis, which is just essentially when you look at the charts you try to predict what's going to happen next based on annotating it. So that is drawing little lines on it, maybe using an oscillator or some sort of other technical indicator. So these are the very simplest things that you can do. So without messing about, let's just jump straight in. A support line is a horizontal line on the chart which causes price to reject and bounce higher. That's all it is, okay? As to why it happens, we'll delve into that in a little bit later. Resistance is the exact opposite. It's a horizontal line on the chart which the price can interact with and then therefore is likely going to bounce lower. So the reason that these occur is because they're a manifestation of trader psychology which occurs on the chart. So I've drawn on two here. You can see this resistance line is around about the 3,400 mark. This support line is around about the 3,200 mark. That is no coincidence. They tend to gravitate towards round numbers on most charts because, as I say, they represent people buying and selling, the psychology of people buying and selling. People like to sell and buy at round numbers so that they can either say, I sold my shares at this price and it's a nice round number. They can bounce it around, bandy it about in the pub, or they want to do quite the opposite. They want to short and then sell and then buy back in, at about this price as well. So that's why you tend to find them at round numbers. So we'll talk about how they form. A resistance line is essentially just, as I say, it's when a lot of traders are looking at the chart. There's three participants in a market. There's the longs, the shorts, and there's the guys on the sidelines. So when this gets up to this level, longs think to themselves, okay, I've just made some profit, I want to get out. Okay, so they sell, it goes back down to this level. Or they think, okay, I've bought in at this level, I've just made even, so I want to sell, and then therefore it bounces back down. Shorts think, okay, we're at the resistance line, therefore I want to sell to get into the market. Then the price will reject once more, it'll go down to this level. People on the sidelines will be aware that there is a resistance line up here. They'll also want to be able to get into the market, so they'll become shorts and then they'll short sell at this point and price will reject downwards, or it may do anyway, it's more likely to. The opposite is true of this support line. So longs will want to get into the market so that the price will bounce up here. Shorts will want to buy back so that they can take profit. People on the sidelines will see that this price has moved down here, so therefore it's likely to reject up, so they'll want to get in, so therefore there's buying pressure. Support and resistance, they have to be horizontal lines. You should note as well, I know that might be a bit obvious, but I'm aware some people may never have traded who've watched this video. When they become broken, it's purely because whoever is responsible, whoever is a participant in the market has just decided that this line is no longer valid anymore because of how the price is moving. Alright, so it's just a simple reversal of psychology. Okay, people often say that when a candlestick breaks through 3% of the price on the close, very important that it's not intraday trading, i.e. the wick on the close, it breaks through 3%, then that's a good rule of thumb to suggest that there's a breakout going on, and therefore you might want to get long at this level of resistance, which will have turned into support obviously if the price breaks out. So these are just some things that you have to think about, and this is the reason why that these lines occur on the chart. There's three things that make them valid. Number one is how often they've been retested. Okay, so this one's been retested quite a lot. You can see there's a lot of interaction here, so therefore it's a stronger line of resistance. How recently it's been retested? It's been retested pretty recently. There's a lot of interaction here over the last few days, and the volume on which buying and selling occur on these, the more volume there is, then the stronger these levels of support and resistance will be. Cool, anyway, so I just wanted to keep this short and sweet, so hopefully everybody's enjoyed. Hopefully this has given you a good understanding of what support and resistance lines are. These are the very fundamentals, the first things that I will put on my chart after deciding what time frame I'm looking at, of course. Hopefully that's been helpful to everybody, and I look forward to speaking to you all again. See you soon, bye.